I think it's a combination of the two, as you say. I mean, it's easy to focus just on the UK election, but the fact that we have got, or it looks like we're moving to a trade deal with the US and China is very important. It's been a major preoccupation. So in terms of the international stocks, which maybe are holding up a bit better than you might think, given they're obviously going to get hit by the rise in sterling, this is down to the fact that the global backdrop has improved because of the trade deal. But in terms of domestic cyclicals, this is all about Boris Johnson's victory.
And we can see that the FTSE was very slow to warm up this morning. We had a little bit of red on the boards. Now we're up 0.8%. So we've got more stocks opening up, and maybe volume was a little bit of an issue at the start of trade. But if you look at the reaction, double-digit performance in some very Brexit-related names, home builders in particular, and some of these names already had stunning performances year to date. The banks, you've seen that quickly translate as well. As you weigh up the risk to the economy, that we still need a trade deal, maybe 11 months to try and ink one, that there's still some negativity in the numbers, would you be at all concerned about how much is now put into the share prices given the very strong performances today?
I think you're right. A lot of the bounce has now happened. I mean, it's true that they had already rallied before, but they were rallying from very, very cheap levels. But in terms of the economic outlook, sure, it's improved, but are we sort of headed to the sunlit uplands, which Boris Johnson's been talking about? No, we aren't. So I think a lot of the bounce is behind us, particularly in some of these sort of mid-cap sectors, where you've had a big bounce already. They're no longer particularly cheap. Small cap, that's probably the area of favour at the moment.
What economic uncertainty do you think investors need to weigh up still in the UK, whether it's from international headwinds still as we wait out for some trade certainty to be delivered, outcomes around negotiating with first the Europeans and then also around the United States? I mean, we've had a very positive treat from Donald Trump overnight, but there's no certainty that a warm relationship between two leaders translates to a positive outcome for the UK, given that you've had a track record of a US president that has put his country first. So what headwinds do you see for the UK economy, at least in the 12 or next two years, 24 months for investors to navigate?
I think the trade side is the big headwind. I mean, as most sort of economists agree, even if you do get this withdrawal agreement being ratified, the UK is still going to be worse off in a few years' time than if they stayed in the EU. So there's still a lot of uncertainty about when you get a trade deal either with the EU or with the States. And the fact of the matter is, at the moment, the economy is still decelerating. So you've got to halt that slowdown, let alone sort of see a sort of sharp upturn. So things are getting better, but they're not good.
If we flip the conversation around and talk about some of the reactions that we've seen, utilities, I thought was fascinating this morning. These were companies that, if there had been an outcome that put Jeremy Corbyn in number 10, there may have been a large-scale nationalisation program across these utilities, National Grid, Royal Mail, components of BT that they certainly don't want separated and nationalised as well. Does this tell us definitively that the market was concerned that there had been some pricing of risk, that perhaps the polls were wrong about the majority for the Conservatives and that there was a chance Labour could be elected, which meant that these were trading at a discount, these particular stock names?
I think that's definitely true. I mean, sure, the risk of a hard left government was a tail risk, but in terms of those specific sectors, it would have been dynamite. So definitely you're getting a snapback from that. But once you've had this initial snapback, are they really going to go much further? Probably not. But sort of in terms of on a sort of medium-term view, it's not really the utilities you want to be focusing on. It's the more sort of domestic cyclical areas of the economy, which will benefit from a bit of an improvement.
I want to move on to the pound, because we've seen some interesting trading in the past 24 hours from that 131 level that happened pre-polling yesterday to 135 when the exit polls came out, to right back to the 134 handle now. Yeah. What's priced into this trade? Because if you think about it, you've got a lot of people that were concerned that there might have still been some form of a disorderly exit, or that there would be a Labour government elected, so there was some downside risk. The upside risk many thought was capped at this level anyway. And if you consider that we've got a bit of risk on, that would naturally benefit trades like the sterling trade or euro trade this morning. Where do we go from here, and what sort of headwind does that now pose for the overseas earners on the FTSE 100?
I think the pound's probably got a bit more upside from here, but not a lot. I mean, you have to remember that a few months ago we were down at 121 against the dollar, so we've already had a significant rebound. And fine, we're sort of still significantly below where we prior to sort of 2016 levels. We're actually above sort of 150. But I think the bulk of the gain is already behind us. And you shouldn't forget that we are still running a sort of massive trade deficit. Our current account deficit is one of the biggest in the world, and that is a drag on the pound. So I think the bulk of the rise behind sterling is behind us. In terms of sort of the impact on sort of large cap versus small cap or mid cap or domestic focused stocks, that is the major reason why we think if you're going to play the UK market, you want to be in the domestic names and you want to be in small cap names rather than large cap.
Hi, I'm Joanna Bersecci and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.